What's up everyone, Brad here with the Money Dad channel. In this video we're taking a look at Bitcoin's chart because it is, well, frankly not looking too good, and I try not to make too many videos on this channel anymore with kind of a negative outlook on the stock or coin that I'm talking about, just because I try to stay positive. But I couldn't help, I haven't made a Bitcoin video in a very long time, and there's just too much going on this chart. I felt like I just needed to get this out here and get your thoughts down in the comment below on my analysis and what you think of Bitcoin kind of going forward. So we're going to take a look at some chart patterns, some support levels, and the volume on Bitcoin. So let's jump right into it. So I'm using Coinbase's Bitcoin, right? So the volume that you see down here will be how much Bitcoin is traded in Coinbase, right? So that's not the all of the volume in the world in every exchange. It's just the volume in Coinbase, but it is a pretty good indicator because Coinbase is a very big exchange for crypto, right, and Bitcoin in particular. So let's scroll out a little bit, take a look at this chart. I'm going to scroll out quite a bit actually. We're in TradingView. These are daily candlesticks, and we're going to go over quite a few chart patterns here that I see, but let's start with the volume profile. So down here we've got all the volume, all the green candlesticks you see in the volume are days where volume was positive, and then red would be volume that is negative, so there was more sells than buys, right? So as we zoom out, you can get a better idea of where the big volume days are. And what I want to point out by zooming out so far here on the volume is we haven't had a ton of volume on a big upswing in a very long time. You have to go back to the beginning of 2021 to really see a lot of volume on a big upswing, right? You can see there was a lot of volume right here, and that was when Bitcoin was dropping in May of 2021, it looks like. And then there hasn't really been a whole lot going on in the volume profile. It's been pretty consistent, consistently average. There's this little bump right here. Let's see what that correlates with. It looks like this big drop off right here. There was a lot of volume, and then the volume started to taper off from there as we melted up a little bit. So you see, as we bumped back up from that drop off, there wasn't nearly as much volume as there was on the sell off, right? So what I'm getting at is we're starting to see an uptick in volume right here. Look at these volume sticks right here. You see how this orange line going in it is the average. You see how this orange line is starting to trend up? That means volume is ticking up, and it's ticking up as price is coming down. So that is kind of bad indicator number one. The volume profile is just not looking good for Bitcoin going forward. And let me know down in the comments below if you guys see anything different from this analysis, if you think I'm off on this. But this is just kind of my opinion and how I look at things. So volume's not looking good for Bitcoin. And by the way, I didn't mention it in the beginning of the video, but the big reason why I'm making this video is because Bitcoin had a pretty bad weekend. I'm recording this Sunday evening, and we're currently sitting at $34,200 on Bitcoin. And you can see it's just kind of dropped like a rock over the last 4 days. 4 days ago we were up at 39,700. It looks like 5 days ago we were just at that 40,000 mark, and now we're all the way down to 34,000. So we've lost $6,000 on Bitcoin, which is like a 15% move on a $40,000 coin. 15% in 4 days. That is no bueno, not good. Sunday alone we're down 3.5%. So that was really what caught my eye to start taking a closer look at this chart. And I've put a couple of things together to talk about in this video. So we talked about volume not being good, right? So let's put a little volume bad, little kind of list of things that are not good on this chart, right? Volume is bad. The volume profile anyway is bad. Now let's zoom out some more, and you can kind of see this channel that we're in. It wasn't the top of the channel wasn't super strong. We had 2 points right here that I've had connected. that I tend to prefer to have at least 3 points to really make a channel or a support or resistance line, but this top kind of matched well with this bottom, so I went with it because the bottom has 1, 2, 3, close to 4, and then we had a 5th until we broke below it. That's a pretty good support line, and that there being that many points means it was strong support, and we just broke through it. So that is a really bad indicator. We really need to get back above this support line, or else this is bad. This is a kind of a breakdown of that support, and we could be looking at much lower prices, right? So this kind of big channel that we've been in since, April of 21, it's been a very long time that we've been in this channel, is breaking down. Okay, so that is kind of the first pattern, that the first macro pattern, the big pattern on here. Now another pattern inside, and I'll get to some price targets for the downside here after 1 or 2 more patterns that I'm looking at. Another pattern inside of this channel that I've noticed is right here. You've got this drop, and then you have this support line right here. And if you copy this support line, Control C, Control V, copy and paste, and put it up here on top, you get what looks like a bear flag, right? You guys see this bear flag right here, right? That is not good. Right, a bear flag suggests lower prices. It suggests we're going to break to the downside, and look what happened. It broke down under the bear flag. So that can project to a price lower as well. Now that price is very extreme. I was looking at that price before I hit record on this video, and it is way down there. So I don't think we're going to follow that track anytime soon. But to just give you an idea of it, and I don't mean to scare anyone in this video, this is just, I'm trying to be as neutral as possible here, but I don't really see anything good on this, in this chart, to be honest. Let's see if I got that just right. And I'm laying this projection out from this bear flag for you guys in this video just so you know what it is, but I honestly don't think we're going to head this far to the downside. This bear flag, because it was so big, suggests we're heading to $12,000 on Bitcoin. That is crazy low, right? I mean, we're at 34,000 right now. You're talking about a 60% decline from here after we've already lost 50% from the all-time high, right? We were at 69,000. We're now at 34. So we're about 50% down from the all-time high. And it's suggesting another 66% or 60% to the downside to get down to 12,000. Like I said, I don't think that's going to happen. I'm going to show you a more conservative support line or downside target based on some previous support and some Fibonacci retracement levels. So we'll leave that there, just so that you kind of have an idea of all of these support lines that I'm looking at on this chart. So volume bad. Let's get rid of that. Let's add a few more things. All right, volume bad, channel breakdown, bear flag breakdown. All right, the list is kind of adding up, right? It's just not good. It's not good. So volume is not good, volume profile is not good, channel breakdown, bear flag breakdown. Let's look at some support lines. So I was trying to look at if there was any just horizontal support lines from prior, where we can see where there's just a lot of, well, support, right? A lot of kind of buying opportunity. And you can see these volume spikes right here kind of coincide with this area, and this volume spike right here coincides with this area. So to me, that looks like a pretty good area of support. So I would say this, let's see if I can get it. We'll go over here, about right here. Looks about right. Yeah, because that matches up with over here as well. So this looks like a good area of support, and that is sitting at around $29,700. So it looks like there should be some strong support in that area. So the bad news on that is another $4,500 lower than where we're at right now. But it looks like that is probably the next area of significant support. You could have a smaller support range right here. There was a tick in volume right there, so we could put one right there, but I don't know how strong that's going to be. I wouldn't hope too much on it. It looks like 32,900, or maybe just call it 33,000 even, just to round it. Looks like that 33,000 level might have a little bit of support, but again, it might just be little. There might not be a whole lot there. I would bet more on 29,700 being more strong for support, that kind of 28, 29,000 range. Okay, so we got a couple levels of horizontal support there. Now let's look at Fibonacci retracement, and we're going to retrace. We're going to use the lows from March of 2020 in that epic sell-off all the way to the all-time high. So this is going to be a very, very long-term, a lot of data in this, right? We're going all the way back to the lowest of lows. So let's get back there. Let's get our Fibonacci retracement. And this low was, where were we? $3,800 back then. It's going to take me a while to get back to our all-time high. Let's bring it all the way up here. Slide it over. Sorry, I'm working with a laptop model here, monitor here, so not a whole lot of screen space to work with on this, so I got to keep scrolling. I almost got the top. There we go. All right. So we have our Fibonacci retracement levels set from the March 2020 low to the all-time high in November of 21. All right, so this suggests some of our most significant support levels, which we have cut through quite a few of already. Some more bad news is during these last 4 days, we cut through the 50% Fibonacci level, which is actually not a real Fibonacci level. It's more psychological, but it has been used. That's why it's on this tool, is because sometimes it does act as support and resistance because it's so psychological, that 50% level. But the next real Fibonacci retracement level is that 61.8%, and look where that happens to be. $28,700. It's kind of hard to see because we have our orange line right here cutting through it, and that's because that orange line that we just put at 29,000 is so close to it, right? So we kind of have a Fibonacci level at 28.7, super close to that orange line that we set at 29.7. So there's kind of two reasons for that to be a major area of support, right? You've got previous support in that area twice, in January of 21 and in June of 21. And then you also have a major Fibonacci retracement level in that area. So I would say 28,000 to 30,000. That area right there is major support, major support. So if I had to guess where we were going to find support next, I would say it's in that area. Now I hope we don't head that low. I hope we turn right now as I'm making this video and head to the upside. But I'm just being real with you guys when I look at this chart, and I don't see a whole lot of good in it. So I'm letting you know, hey, this is what I see. This is the support levels that I see. 28 to 30,000 looks like kind of that range where we could be heading, right in here. Let me know what you guys think down in the comments below on this analysis, these kinds of analysis, chart patterns, Fibonacci. Is there something else that you would like to see in these videos, a different kind of tool, different kind of analysis method? Maybe there's some kind of fundamental reason why Bitcoin is heading higher or lower in the future that you have more knowledge on than me, let me know down in the comments below. And if you enjoyed this video, please hit that like button for me. It helps my channel out. It's free. And if you're not a subscriber yet, please consider subscribing. I do stuff like this in all of my videos. I do a lot of stocks, Bitcoin every once in a while, mostly stocks on this channel. But come along for the ride, hit that subscribe button. I will see you all in the next video. Thanks.